Voiceover. Most founders think hiring contractors as an optimization strategy is just a formality.
But that's the invisible trigger. It quietly pierces your corporate veil. You won't feel it today, but when scrutiny hits, your personal savings becomes reachable.
This is Business Unpacked. Let's survive.
Right. So our mission today is a rapid-fire review of Vitaly Gonchar's LinkedIn posts from this week. We are decoding the hidden architectural flaws that can basically destroy a business.
Exactly. The things you think are optimizations, but are actually just planting landmines in your own foundation. We are doing a deep dive past the surface level hacks.
Before we break down those systemic realities, though, we were asked to give a shout out to the product LFBOSS Business Operations System Standard. And honestly, looking at the specs, it makes sense.
Most software rents you a seat. LF Boss builds you a machine.
One flow, Stripe to QuickBooks to LF Boss, it kills chaos.
No monthly fees, no lockouts. You make money first, then pay from profit.
Don't just pay, get paid. Use our tools and automatically get 50% of the revenue shared back to you. Turn your operations into an income stream.
If you want to stop relying on random chats and start building an asset, go to the link in the description.
All right, let's jump straight into the first structural flaw.
Yeah, so for Lee kick off the week, analyzing the savings trap of hiring independent contractors. And I have to be honest, as a skeptic, my immediate reaction was, why wouldn't I do this?
It seems like business 101 to most people.
Right. You bring someone on as an independent contractor, you avoid paying CPP or employment insurance, and that cash goes straight to your bottom line. I mean, thousands of startups do this every day.
Yeah.
You're saying they're all just ticking time bombs?
I'm saying exactly that, because what you are calling a clever optimization strategy, tax authorities call a legal fiction.
A legal fiction?
Yes. You can write a beautiful contract that says independent contractor at the top. You can both sign it. But the CRA doesn't care about your written contract.
Wait, so the contract itself doesn't protect me?
Not at all. They don't read your intentions. They look at the facts via the RC4110 protocol.
RC4110.
Sounds intense.
It is basically an operational control test. If you dictate their hours, or if you provide the corporate software...
Wait, so if I hand this supposed contractor a company laptop?
The system instantly voids their contractor status.
Just from a laptop.
If you own the tools, or if you bear the financial risk, they classify them as an employee. Your operational control turns their independence into a complete illusion.
Okay, but let's say I get caught. Like, I get a fine, right? Is it really a fatal flaw?
It is absolutely fatal to your margins. This lack of operational hygiene leads to severe margin erosion. You face retroactive assessments and massive CRA audit penalties.
Oh, wow. So it just wipes out years of perceived profit.
Entirely. And this brings up a crucial dividing line. It's the difference between a fragile craft, which is totally dependent on the owner, and a systemic business. A real business has its value embedded in a bulletproof, alienable process.
You know, a process you can actually separate from yourself.
Okay, so pretending an employee is a contractor destroys your margins. But that same desire to hide things creates an even bigger problem with your actual corporate structure. That leads into his February 26th post about the end of corporate secrecy.
Right. The era of backroom secrecy is completely over.
But come on, people still use offshore structures. You set up a shell company, maybe register a P.O. box somewhere quiet to keep competitors guessing. Isn't a little opacity still a strategic advantage?
It used to be. But transparency is no longer an ethical choice. It is a baseline technical requirement for G7 and OECD legitimacy. Regulators and banks simply no longer trust declarations.
So what do they look at?
They analyze hard signals. The most critical one right now is POEM.
POEM. Like place of effective management, right?
Precisely. It means where the actual commercial decisions are made. If there is ambiguity there, it leads directly to technical failures.
Technical failures like what?
We are talking daily reporting penalties, involuntary strike-offs.
Wait, involuntary strike-offs. The government just unregisters your company.
Yes. You cease to exist on paper. And your bank accounts get frozen.
Man. So trying to hide actually locks up your own money.
Exactly. Transparency transforms a legal entity into a liquid asset. It eliminates dead capital that you can't scale or collateralize.
So how do you prove you aren't just a shell?
Your systems have to meet what Vitaly calls the proof standard. You need real-time accuracy of beneficial ownership, and you need proof of the physical location of original corporate records.
Real-time accuracy. Got it. Okay, moving on to the product itself. Vitaly made a really counterintuitive point in his February 24th post about the perfect product. He calls it the Singer error and the LTV trap.
This is a fascinating paradox.
Yeah, his core argument is that creating a flawless product without a lifetime value and LTV business model is a fatal mistake. But stop right there. If I build a product that literally never breaks, isn't that the holy grail?
You will dominate the market right up until the exact moment you go bankrupt.
How does that even make sense?
Well, look at the historical example he uses. Isaac Singer. Singer created a sewing machine that was an absolute masterpiece of engineering. It never broke.
Which sounds incredible for word of mouth.
Incredible engineering, terrible business architecture. Because the machines never broke, it led to total market saturation and zero recurring sales.
So once everyone has one, you're done.
Right. Relying on one-time transactions forces you to constantly acquire new customers at rising costs.
But by making a product that never dies, he built a dead end instead of an ecosystem.
Exactly. Ford and Mercedes survived because they realized they were not just selling hardware, they were selling mobility.
Spare parts and maintenance.
Yes. The first sale was just the entry point. Survival architecture requires recurring revenue, ecosystem depth like updates and add-ons, and post-sale data control.
But hold on, doesn't that just sound like modern SaaS subscriptions, where they charge you a fixed fee forever for something that used to be a one-time purchase?
Vitaly explicitly warns against that. Modern SaaS fixed fees are parasitic. True LTV has to be built on shared growth. You can't just charge regardless of client success.
Shared growth. Okay, that makes sense. All right, the final post from February 23rd, the hierarchy of tax control. Vitaly says beginners falsely assume basic business registration automatically resolves all government compliance.
It's a massive blind spot for new founders.
My skeptic brain flares up here because when I started my first company, I got my base business number. In my mind, I was compliant. What am I missing?
There is a strict hierarchy between a base corporate identifier, like your business number, and your transactional tax accounts.
Like GST or HST.
Exactly. Reaching specific revenue thresholds automatically triggers new obligations to register for and collect those indirect taxes.
So if my sales spike, I might cross a mandatory threshold without even knowing it.
Yes, and systemic opacity here leads straight to audits.
So just dumping receipts in a shoebox means I'm probably violating the law.
Without a doubt. Separating base registration from indirect taxation flows is a universal pattern in all mature global markets. It is not just a local quirk.
So operational hygiene is actually a competitive advantage.
A massive one. You have to design your internal accounting, so auditors see clear separation from day one. Sell your business every day until you actually want to buy it.
Sell your business every day until you actually want to buy it. I love that. Well, this has been an incredibly eye-opening deep dive into the hidden mechanics of survival.
This week proves that operational hygiene isn't just about passing compliance. It's the fundamental architecture of your survival and bankability.
If you want to stop relying on random chats and start building an asset, go to the link in the description.